No?
I
Can you hear me?
Simplified Management Act Sri Lanka incorporated by an act of parliament. CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuous professional CPD program for its members and students at no cost. Today's knowledge sharing session on the impact of proposed tax changes, personal tax and withholding tax will be delivered by Mr. Atula Ranavira, Managing Partner Ranavira Associates, and Mr. N.R. Gajendran, Senior Partner Dutchman Company. This will be followed by a question and answer session moderated by Mr. Sulaiman, Tax Partner Ernst & Young. I also warmly welcome the CMA President, Professor Lakshman R. Vattavala, other council members, members of CMA, invitees, and ladies and gentlemen. To commence the program, I have pleasure in inviting Professor Lakshman R. Vattavala, Founder President, CMA Sri Lanka, to deliver the welcome address and introduce to the today's topic. Professor Lakshman R. Vattavala, I am honored to invite you to deliver the welcome address. Over to you, sir.
Thank you very much, Mr. Rajendra. We are really Let me welcome all of you who are present here. Today we are having a very important seminar. Actually, it is really a pre-budget seminar, which is relating to taxation. So I'm sure that the numbers that have registered seems to be quite high. We have almost over 800 registered, but I think at the moment, still many of them are still logging in. That's a normal thing in the case of online programs. So our theme today is on the impact of professional tax changes, the two important areas of personal tax and withholding tax. This was something that the government has announced recently. So we thought that all of you would like to get first-hand information of this, and also from very eminent maybe professionals who will be handling this topic. So as Mr. Gajendra mentioned, the three professionals, Mr. Atula Ranavira, Mr. N.R. Gajendran, and of course, Mr. Sulaiman. Now, they are really those who are not only conversant, but very well known in the taxation field. So I must thank them for coming and speaking at our tax webinar that have been organized by CMA. All of you know that CMA is the National Professional Management Accounting Body in Sri Lanka, and we are really involved in not only the management accounting, but on taxation, sustainability, so many other areas which is of benefit to the country. One of the most important things today that we have is integrated reporting, where one measures the value created by everyone. And I think this is something that we need to see, that even in the budget that is going to take place shortly, that we need to see the value that will be created by the budget as a whole, and also by individual ministries, what they will do. I think this would be a good start. And I must also tell you that we have planned our budget seminar on the 19th of February. That's from 2 to 5 p.m. And of course, we are having it at the Taj Hotel. So normally we are having online webinars. So I'm sure that you would like to come to a physical event, and that this would also be enable you to meet up with the others. So with those short remarks, I think all of you are eagerly waiting to listen to our very erudite speakers, and also Mr. Sulaiman will be the moderator, and he will be able to ask very relevant questions and also give an overview of what is happening in the taxation field. So let me thank everyone for the great support that they have given to us, and I'm sure that this should be an event which will really assist you both in your personal ways and also in the maybe corporate and other ways. Thank you and wish you all the very best.
Thank you very much, sir. Next on agenda is the discussion on the impact of the proposed tax changes, personal taxes as well as on withholding tax. This will be presented by Mr. Atula Ranavira, Managing Partner Ranavira Associates, and Mr. N.R. Gajendran, Senior Partner Gashman Company. Over to you, sirs.
Yeah, good afternoon, everybody. Thanks, Professor and Gajendra. Right. Now, I would like to thank the CMA Institute for organizing this seminar for the benefit of our own members as well as the general public who are interested in taxation. Right. Now, to conduct my presentation, I'll share a PowerPoint presentation prepared for this particular purpose. I'll share the PowerPoint presentation first.
I given you the link here.
I think this PowerPoint presentation is visible to everybody.
Yes.
Right. Now today, my role is to present the recent changes, mainly the recent changes announced by the President of the country. On 18th of December 2024, President announced certain tax changes which is yet to be legalized. Most probably these things will get legalized from 1st of April, I think. Anyway, we will study what he has announced with relate to the taxation. Now, in this, there are 2-3 amendments what he is proposing. The most important thing is something to do with the personal taxation. Personal taxation. Now, the first I can say, the personal allowance of an individual is proposed to increase from 1.2 million a year to 1.8 million. I know now most of the participants are knowledgeable in these things, but we will discuss these things. Now, yeah, the personal allowance is proposed to increase from 1.2 million to 1.8 million per annum. With this increase, as we can understand, our tax liability will come down, will reduce a bit. Then the second thing, as per the announcement, the first slab of 500,000 rupees, the first tax slab of 500,000 rupees of an individual is proposed to increase up to 1 million. The slab of 500,000 is proposed to increase up to 1 million. And the second slab will not be there. Second slab of 500,000, which is taxing at 12% at present, will not be there in future. That means the first slab, then in future, once this is legalized, the first slab will be 1 million, taxing at 6%. Second slab will be 500,000, taxing at 18%. That means 12% tax rate won't be there in future. Okay. Then the next slab, as usual, 5 lakhs at 24%, 5 lakhs at 30%, and another the balance at 36%. That means now the first slab 1 million, the second slab will be 500,000, taxing at 12%, taxing at 18% and not at 12%. Now, most probably now these things to give the effect of these things, First, they have to put this into the parliament and get it approved as an amendment act. Up to now, even the bill is not released yet. Therefore, they have to prepare the bill, gazette it, then give sufficient time period for public objections. Then after that, they can legalize in the parliament. When we consider the time time consume on all these things, most probably by about latter part of April or May, they'll be able to legalize the thing. Most probably, I feel that they will effect these changes from 1st April 25, that is for 25-26 years. Now, as a result of these two changes, an individual's income and any individual who is getting about 1.8 million at present will save 42,000 rupees. And the maximum saving of an individual, will be 228,000. For better understanding, I have put these things in the worksheet like this, a table. The current situation, then the proposed situation, the current situation and the proposed situation. Current situation, the assessable income, then accumulated assessable income. This is actually the taxable income, ultimately assessable income, then the accumulated assessable income, then the tax amount and the accumulated tax amount. Now, at present, 1.2 million personal allowance of the assessable income is tax-free, no tax on that. Next, 500,000, that is the first 500,000 rupees of the taxable income, taxing at 6%, then it is 30,000. Then next 12%, another 90,000, another 60,000. Likewise, it is increasing 30, 60, 90, 120, 150. Then accumulated amount 450,000 at the level of 3.7 million assessable income level. That means 2.5 million taxable income. Then any extra, any amount exceeding this amount is taxing at 36%. Now, with the proposal, what will be the situation? Plus 1.8 million, that is the personal allowance, therefore no tax on that. Next 1 million will be taxing at 6%, 60,000. Then no 12% rate. Then next 500,000 at the rate of 18%. Next 500,000 at the rate of 24%. Next 500,000 at the rate of 30%. Then we are reaching 4.3 million. 4.3 million. Anything in excess of 4.3 million assessable income will be taxing at 36%. Right. That means now what will happen? Accumulated tax in this level, the accumulated tax of 450,000 at present will reduce up to 420,000. Then I have put some figures, arbitrary figures, to compare what will be the tax saving. This red color table is nothing to do, is not matching with these figures. For that, I utilize new figures. Accumulated assessable income. If the accumulated assessable income of 1.5 million at present, 1.5 million at present, that person is paying some tax. But now in future, he need not to pay. There, he'll be saving 18,000 rupees. Then at a total income of 2 million situation, total income of 2 million situation, 1,000 rupees. At the total income of, because I have taken the assessable income, not the taxable income, to 2.5 million level, the saving will be 102,000 per annum. Then 3 million level, income level, 156,000, 3.5 million level, 192,000, 4 million income level, 228,000, even 4.5 million, again 228,000. That means the maximum saving will be 228,000. That is the effect of these two proposals. Okay. Now we'll move to the next slide. What are the other proposals? There are few more proposals. The export of services at present, no tax at all. Export of services are exempted under item U3 of the third schedule to the Inland Revenue Act. Now, the President proposed to introduce a 15% tax on that. Actually, this is an IMF proposal. In 2024 June, along with the country report, IMF country report, they proposed to put 15% tax on service exports. Accordingly, now President is announcing to honor that IMF proposal. President is announcing that in future, they will introduce a 15% tax against the 0% at present. What will be the repercussions of this? Now, this might discourage a lot of people to remit money to Sri Lanka, bring money to Sri Lanka, because in the case of the export of goods, the customs and all the documents are there. But in the case of service export, the monitoring of that income by the governmental institution is very difficult. Therefore, some people might keep their profit in abroad and bring money to run their businesses. That might badly affect to our foreign exchange reserves. Next, digital services to be liable to VAT at 18%. Yeah, this is also a proposal given by IMF along with their country report. They propose to make the digital services liable to VAT. Actually, this was an item which a lot of our professionals were talking for long past so many years, that the local digital service companies are paying VAT, but overseas digital service companies are not paying VAT. At present, that is the situation. Therefore, it is needed to cover all digital services companies to be liable for VAT. Therefore, this is a good and entertaining proposal, I think. Then, withholding tax of 5% on interest and discounts proposed to increase to 10%. Now, at present, we know all our interest income are liable to tax at the rate of 5%. In future, they will increase this rate to 10%. I think that's a good idea. Increasing is not a problem, but along with the increase, anyway, the President announced that they will introduce direction issuing system through the IRT on case-by-case basis, direction issuing system. As far as this direction issuing system is simplified and less time consuming, if they'll make it simplified and less time consuming situation, then of course this increase of withholding tax rate to 10% is not at all a problem. Therefore, it is a good proposal subject to introduction of simplified and easy direction system. But when we talk about these directions, to get a direction, with my experience, you may have to visit the IRT at least 2 times. At least 2 times. Now, if you'll hire a professional for that purpose, if a professional sends a staff member to attend to this for 2 visits, firm has to charge for that also. Ultimately, that innocent individual taxpayer will suffer a lot. Therefore, I think when they are doing this direction system, they should think about e-facility system for that. Right. Next item, SWAT system Now IMF wanted to remove the SWAT system. They proposed to remove the SWAT system, but nobody managed to find a better system than SWAT. We know a lot of the difficulties are there, a lot of weaknesses are there in SWAT, but we couldn't find a better system than SWAT. As a result, President announced that they will continue with the current SWAT system without abolishing that. That's a good sign. Next, not to implement the imputed tax also. Now, IMS wanted to introduce an imputed tax, some type of a wealth tax on properties, what you have, and maybe even the properties what you are using. Now, that tax is discouraging people to build up their asset base, and this is not much entertaining thing. And as a result, President announced that imputed tax, which proposed by IMF, not to be implemented. Then removal of import restrictions on motor vehicles in stage by stage. This is also a IMF proposal. When we take IMF figures, statistics, to finance the government expenses of 2025, they wanted to increase the tax revenue as a GDP percentage as a GDP. That percentage they wanted to increase by another 1.5%. Out of that 1.5%, 0.88, almost 55% of that increase they expected to get from this vehicle imports. Therefore, definitely, without going for vehicle import relaxation, I don't think the government is in a position to manage their government expenses for the year 25. Therefore, even there's a hit to the foreign exchange and the reserves, government has to do that. Most probably from next month onward, they will activate that. Now, I have gathered some information from IMF proposals and the country report issued in 2024 June. As per that, at that time, these figures are now, the situation is different. Now these figures they have quoted. Now in this, they have quoted the government revenue as a percentage of the tax revenue as a percentage, to the GDP, they wanted to increase from 12.4% to 13.9% in 2025. Subsequently, these figures have got changed. Anyway, roughly about 1.5%. Out of this 1.5%, how they are trying to manage that 1.5%? Out of that, 0.8, almost 55%, 52% is from vehicle import relaxation. That is so important. Therefore, government has to do that. Otherwise, they will not be in a position to manage. Then, the IMF, as I mentioned, these are the IMF proposals. Imputed rental tax, now will not be implementing that. Service export, they propose some taxes, and now we are going to implement. Then betting, gaming and liquor business, they propose to increase from 40 to 45%. That also, President announced that also will implement. Then they were talking about the special commodity levy, removing of special commodity levy and replacing with VAT. I don't think that will happen immediately. Then digital services, they propose to introduce 18% VAT. That will happen as President's announcement. The vehicle import, then lease contract, the stamp duty to increase from 0.1 to 0.2%. That is also announced by the President that they are implementing this. Now, then abolition of a system that will not implement. Now, when we see all these IMF proposals, for most of the things, government is agreeing with the IMF. Right. Then proposed tax revenue measures and administration measures, the IMF proposed to strengthen the remis system. Yes, that's a very good thing. And if we turn back, for last 2 years, the remit system of the Inner Revenue Department has improved a lot. No doubt about that. Improved a lot. But still, there are weaknesses. Therefore, we have to rectify all those weaknesses. Then the IMF next proposal was the streamlining the IRD online portal to simplify individual tax return. Yes, this also implemented along with 23-24 tax returns. IRD introduces simplified tax return for some individual lower level income or only one income source people they introduce, either interest income or employment income. Then expedite VAT re-registration. Then have a database for estimated market value of properties. I don't know what will happen to this. They propose it, but not up to now. I have not seen anything progress. Then sale price and with relate to this market value is for various taxes as a base. Then data sharing among government entities. Yes, that is very important. For that, we have already along with 2023 amendment, we did a small amendment to the Inland Revenue Act also. Subsequently, the finance minister at that time published a gazette notification also covering this requirement of sharing the information. Now, that is how when you log into your tax return in the Inland Revenue Department tax TIN account, you can see whatever the withholding taxes, what you have paid through banks and financial institutions. That means they have gathered this information. They got the information in electronic way, means, and uploaded into the system. Then reduction of corruptions. Yes, everybody are talking on this matter. We have to reduce or eliminate the corruptions. Now, we'll see the achievement, recent past tax collection achievement. I have gathered this information from various documents, but there may be slight differences of these 2024 figures. Now, income tax collections, income tax compared to 2023, the income tax collection has gone up in 2024 by about 10%. Then VAT has gone up materially. Because of that, VAT rate increase also has affected here. Then SSCL also has gone up slightly. Then betting and gaming levy doubled. Then share transaction levy slightly increased due to volume of transaction mainly. Then other taxes has come down. Then the taxes collected by the provincial council, share taxes has gone up. Ultimately, the tax of 1.5 billion has gone up to almost 2 billion. Now, what we have to think is the tax collection, yes, it is increased by about 25%. In 2025, again, we are expecting a big increase. Now, for what the government, the most important thing, when they are achieving these targets, we have to control the expenses for what they are utilizing this money. Whether it is for consumption services or consumption requirements or investment requirements, recurrent expenses or capital expenses. As far as they are utilizing only for recurring expenses, there won't be a development of the country. To have a development, definitely part of this money should go to the investment or capital expenditure as well. Then effect of those tax increases. Now, we can see that tax has gone up. That means people have sacrificed their day-to-day expenses or their savings. Now, that means savings ability has come down. Then the buying power of the market has come down. Investment ability has come down. Capital investment ability has come down. Gross domestic production, we have to think about the gross domestic production. If the government also invests in capital expenditure, yes, this will improve. And the other thing, private sector, when the private sector savings or investment ability comes down, the gross domestic production investment will come down. As a result, that will badly affect the gross domestic production. I know I'm not going to talk much on these things because Mr. Gajendran is there to cover up that. Then, very recently, I will take few minutes and finish it off. Withholding tax on outgoing remittances. On 11th December 24, the Commissioner General of Inland Revenue published a new gazette notification with relate to outward remittance of money by licensed commercial banks and authorized dealers. Now, there has to be a control on these things. We had some control. We had the circulars issued by the IRD. Now, instead of that, it is replaced with a gazette notification. As per this gazette notification, none of a licensed commercial bank or an authorized dealer can remit money on behalf of somebody else for any purpose other than the purposes listed in a negative list. In this gazette notification, there's a negative list. I think 21 items are there in that negative list. Now, other than those requirements, sending money for those requirements, for everything else, these authorized dealers and the bank should seek for directions from the IRT through the person who is remitting. Now, we can call it as tax clearance certificate. Should obtain, suppose I remit money, I should go to the IRT and obtain a tax clearance certificate. Then I have to submit that tax clearance certificate to the IRT, to the bank or the authorized dealer for them to remit. Now, this negative list, I have just copied down the important wordings of that. I'm not going to read all these things. Things like import of goods, then investing in the sale proceed of quoted public company share investment in Sri Lanka, then remitting out of the dividend money of such that type of investor, then outward remittance through outward investment account, whatever the money brought, and things like that. There's a listing of negative list. Now, anything listed in this negative list, you need not to get this tax clearance certificate. Otherwise, if it is not listed in this, I'm not going to read everything, not listed in this, you have to go to the IRD, submit your documentation, and seek for a tax clearance certificate. And give that tax clearance certificate to the banker or the authorized dealer who is remitting money. Without that, they can't remit. Right. Then, in addition to this, I think that's all with relate to the recent tax changes. We can expect some more tax changes along with the government budget, which is to be read on 17th February. Right. That's all for the time being. Thanks, everybody. Thanks. Kajendra, over to you.
Should I start, Rajendra?
Yeah, better, yeah.
Thank you, Atula, for the detailed presentation of what has been proposed by the government before the budget. I don't know, it's a new trend or a habit where the policy statements have been made before the budget and not with the budget. I don't know whether it's a good habit, but it's happening because in the budget, it will be an anticlimax because some of the policy and the rate changes have been already announced. Now, the burning issue at the moment is on the withholding tax on interest income. If you see, there are about over 800 people have registered for this session. And when we started the session, there was only 100 people. Now almost 430 people are now logged into the session because of this withholding tax on interest income, which has gone up from 5% to 10%. Now, this has been brought in as a measure to bring in money tax in advance to the government. And also the impression is that the people who having interest income, irrespective of the withholding tax deducted, they forget the withholding tax and they don't pay the tax. But if you go into the nitty-gritty, now if tax is withheld on interest income at 10%, say a person individual has only interest income, no other income. Now, even if he has a monthly income of 361,000 a month, totaling to 4,330,000 for an year, he will end up with a refund. For example, if a person has about 60 million in fixed deposit, and currently the interest rates are, say, 7%, he will get an income of less than 4.3 million or around 4.3 million, and he will have no need to pay any tax. That means any individual having a deposit as much as 40, 50, 60 million, if the interest rates comes down, this capital base will still go up. Or if the interest rates goes up, if it is about 10%, the capital base will be about 40 million. So invariably, people, unless you have large deposits, people having only interest income at this 10% rate, they will have to end up with a refund situation. Now, you know how difficult it is to get refund. So taxpayer individuals cannot be told, file the return. Already it's in the provision, I think, for interest income for senior citizens. If it is like quarterly basis, you can get a refund. But it's a cumbersome process, and it is generally the money is lost. It doesn't happen. Then, as Atula said, you can have a direction system. And as he cautioned also, direction system doesn't work the way it should work. And in that process, by the time you apply the direction and get the direction, there can be a time lag, because the revenue officer will start questioning so much, because he has to make a decision to issue a direction. And the direction might take a few months. It can take, in certain cases, in the past, it has taken even up to 6 months or even more. By that time, the damage is caused and you have a refund situation again. But the best solution for this, we had a system before, that you have a self-declaration system. Self-declaration system, and by that process, taxpayer makes a declaration that his withholding tax will be enough for his liabilities. And naturally, taxpayers having at 7%, or the banks are giving 7% interest rate roughly. If you have even 60 million, you will almost have a refund situation rising, or it will be marginally less. So any deposit less than 60 million, fixed deposit less than 60 million at 7%, you will end up as a refund. So if he makes a declaration, you can always avoid the tax deduction. The banks or the finance companies, the financial institution has to accept what the taxpayer has given and not deduct. But then there again, there can be incorrect or false declaration. People say they can split into amounts and all. That can be, with the recent the technology now it's in place, should be avoided, because you can either use your identity card number or TIN number when the deposits are created. You can start even with the TIN number or identity card number, so that you cannot make a incorrect or false statement. The point here is, when there is a withholding, when there is interest income, particularly when there is interest income from a bank or financial institution, the recent development in the amendment to section 123 they have to almost give on a regular basis on electronic form. These banks have to report to the Inland Revenue what has been prescribed by the Commissioner General. So if Commissioner General prescribes, you will get the information and connectivity. So you don't need to go in search for information, the Inland Revenue, you can get the information and connectivity with the system. Most importantly, if you read Section 89 of the Inland Revenue Act, any withholding tax which has been withheld by the withholding agent, a taxpayer should get automatic credit. There is no conditions or requirements attached. Now, for you to give your withholding credit, you will have to show, even if you show your original withholding tax certificate or a confirmation from the bank, you won't get the deposit if it doesn't appear in the system of the Inland Revenue, or they feel the bank, the money has not reached the system. They don't know how it is, say the bank has not remitted, or if there is any doubt that the money has not been raised, they will say, we can't give you the system. Now, that is not provided in the law. Law says if there is withholding tax under Section 89, it's a very small section which clearly says if there is withholding tax, you have to give credit. So fundamentally, most important point is if there is interest, when there is interest from a bank or financial institution, and when a person is liable to pay the tax and is called upon to pay the tax, or the department says you have to pay tax on this interest income, automatically you have to give the credit. Why 10%? Because the not only the law says you have to give automatically credit, because the withholding agent is a statutory withholding agent is the bank. You are not trusted or relied on the individual taxpayer or the taxpayer, whoever it is, and the bank has been told to withhold and remit. So whether he withholds correctly or the withholds and remit timely, it is something with the Department of Inland Revenue and the bank. So basically, they have to give instant credit. Now, most of the people have a problem, whether they are little money they get, which is especially the senior citizens and people who live on savings, the interest rates are dropping. With that, goes, our money will be eroded into treasury bills or treasury bonds. That is the solution I am envisaging. You move into a treasury bills or treasury bond, you will have two benefits on the treasury benefit. Because under the current money, then that 7-8% you get. So there is an advantage on that. And the case of treasury bills and bonds, there is no withholding tax. So you don't need to go for a direction. You don't need to make any voluntary declaration, nothing. Because when the treasury, if you place your money in treasury bills or bonds, there will be no withholding tax. So the bank, the Inland Revenue, to my point is, has a moral responsibility to give credit for withholding tax instantly, and thereafter make sure the money has come, or they must have the systems and processes through Section 123 or otherwise to ensure the money has reached them. So this is the simple answer. People has make only thing, you have to see whether, when the basic economic principle is, if the central bank is giving you higher return than a commercial bank, then the central bank is more riskier than the commercial bank. So that's another matter. So you may have to get some investment advisor to see whether it is safer to put for this treasury bills or bonds. But end of the day, treasury bills and bonds, central bank is backed up by the government. But in the past, we have had haircuts on employees, EPF funds and things like that. So there is a solution already there. And also the solution that the government should come up in there, this thing is, they must bring in a self-declaration for this system. So basically, that is the burning issue. We are going to have refunds. We have to get for directions or a self-declaration. But if you move into move into treasury bills or bonds, we can go out of this problem altogether. There will be no withholding tax, and there will be no, you will get a higher rate. Maybe CMA should also write to the Department of Inland Revenue and to the other institutions where yeah, if there is interest income from banks and finance companies, the taxpayer should be given the 10% credit automatically first. They should be given automatically. Of course, if they make a self-declaration, they don't need to deduct. Ruling, the directions are going to take some more time. So basically, that is the issue and the solution for the burning issue of interest income and withholding tax. As Atula mentioned, the tax policy at the moment is not encouraging savings and investments, and that is affecting the individual taxpayers very badly, because their income, disposable income, savings and monies for investment have been substantially eroded because of the high cost of living. The purchasing power has been substantially eroded, and also the high tax rates of 36%, reaching at fairly low level even after the revisions. Now, other proposals Atula very ably dealt with. Export of services, he said, is going to be 15%. But there, as he said, there has to be caution here, because service income cannot have trails like goods and export of goods, because you have the it goes through the formal channels. Services need not go. But one saving clause, I think the 24 staff report, it says that 15% should come only on corporate income tax, only for companies and for not for individual. That has ample justification, because individual, if you impose on this 15% income tax on service exports, now there are so many people who go and work abroad. They are resident, because they can be, if you are here for, even if you're out for the period, for a short period, 11 months or something, these employees, they can be liable to tax on all their income, even if they're earning abroad. And that's the reason, if you can remember, when Mangala Samaravira was finance minister, for individuals, you had an exemption up to $100,000. So under the modern context, if you are going to impose individuals, you have to increase that amount of exemption to more than $100,000, or at least some exemptions have to be given. Otherwise, there will be individual taxpayers who will be unwittingly not paying the tax, and there will be breaching an offense. Digital taxation was also mentioned. The imposing a VAT, but Lanka hear me now?
Yes, now we can hear you.
You can see? Right.
No.
Yeah, okay. Thanks. We consider the digital service tax with caution. You do it. SVAT is another matter, because I believe the larger taxpayers have greater influence on only. Can you hear me, Gajendra?
Yes,
You can't see me, right? All right.
now
Okay.
can see.
Okay. So that's another matter. You have to the VAT system because it causes a lot of inconvenience for the suppliers and not for the exporters. We under the under the old turnover tax system and we are working. So we have to see where we can bring a system with inconvenience. Also, there is no other country that introduces a system like similar to SVAT in Sri Lanka because our refund system has collapsed. In the case of vehicle imports, there again progress form of tax has not been implemented. You are just introducing a vehicle tax on these high levies on the cap. The valuations of vehicles are irrelevant. So in that basis, a expensive vehicle can pay less than a cheaper vehicle based on the capacity. On the the imputed rent income, it's being done away with now, but it was a good system to track and trace people owning properties who are not paying rent income, having more than one property. From Atula's presentation and also from the recent proposal on the withholding tax on outward remittances, we have to come to a situation, especially for businesses. Now, any remittance from the business foreign currency account is not being included in the negative list. But for businesses, particularly if you have foreign currency, if you want to make remittances outside, you must allow the remittance without a regulatory process. And then you must have a system to see whether withholding tax is required, whether it has been deducted. I can understand when you have to convert rupees and send monies abroad because then there is a strain on foreign currency. But if a person has a business foreign currency account, they should be allowed for remittance. These are some progressive things that uh, has to be looked at it from a more analytical and granular, as Atula said, there will be more taxes coming in the budget because I don't think there is any more areas to tax people at the moment. Because at the moment, the policies, there is no savings and no of the economy, the individuals, they should have the ability to save and invest, and they have a minimum quality of life, and that is not being envisaged at the moment. Thank you.
Thank you, sir. Next on the agenda is the question and session, which will be moderated by Mr. Sulaiman, partner taxation at Ernst & Young. Over to you, Mr. Sulaiman.
Thank you, Mr. Gajendra. Can you hear me?
Yes.
Right. Okay, so just to start things off, we will take questions from the audience. So please do write into the Q&A and then we'll take those slowly. But before we start, just a quick overview. I think both Atula and Mr. Gajendran covered most of the areas in the recent proclamation by the president in parliament on the sort of proposals in terms of revenue, which is actually an update from the review that was provided or was in conjunction with the review provided by the IMF in June, the second review, before the elections. And some of those have been tweaked. I think it was mentioned. So there have been a few negotiations on certain things have been removed and certain things have been included, ultimately to bridge the or to head towards the target set by the IMF to ensure that Sri Lanka's debt is sustainable, right? So it is in this limited space that the government, whether it be past or present, has the ability to maneuver, right? And that limited space is bound by a target of a 15.1% revenue to GDP and a 2.3% primary surplus. So we can't move away from that significantly. If we do, we run the risk of not being able to go ahead with the IMF, or there'll be restrictions, the next tranche will get late, impacting so many other things that will have a trickle-down effect both to the economy and the businesses of this country. So that is the context in which these changes have come in. So within that context, there is not a lot of maneuvering that can be done. And one of the significant, I think, changes that took place was to remove this imputed rent, which was somewhat of a, in a way, would have had an impact on several people, because the IMF was pushing for deemed rent even on the house that was to be lived in, right, that you are living in. So that concept has been taken out. And in lieu of that, there are several other areas that have come. So that is one thing that was removed, that in terms of, if you look at the concession side, right? On the concession side, the deemed interest was removed. Individual income tax rates to relieve the burden of the middle class, which are also paying very high taxes in their individual capacity, starting highest being 36% at a sort of very low threshold. Space has been created for that segment, the lower and middle class, where the tax-free allowance has been increased by 50%, 100,000 to 150,000 a month, sort of benefiting the most, the smallest income level. And then the mid-level also has been expanded quite significantly, where there is a 79% increase in tax-free revenue. However, the higher levels have not been increased too much, right? So the increase is marginal for the higher levels, anyone above a certain threshold. The maximum an individual saves is roughly around 20,000 rupees a month. So whilst that's insignificant for the higher levels, it can be very significant for the lower levels of income. So that is the whole objective of this also, was to only benefit the lower levels and not so much the higher levels. Whilst there is, it is sort of still a burden on middle class as it is, this is perhaps the maximum that has been allowed. So in terms of a concession, again, I think the foreign currency was deemed to be 30% in the earlier negotiation, and now it is, they've halved that to 15%. So foreign currency earnings have been made 15%. As well as, I think SWAT was supposed to be removed. It has been extended again. We are not sure how long it will last for. There is talk that it will be removed towards the end of the year, but that is not finalized yet. So that also is a concession given. So on the how do we bridge that gap, right? So as a result of those 4 or 5 concessions, a gap in the revenue target to achieve this 15.1% rises, and to bridge that gap, the new things that have been brought in is the stamp duty doubling from 1% to 2%. The duty on vehicles have been revised to bridge that gap, as well as this withholding tax has been doubled from 5% to 10%. So like was discussed earlier, withholding tax should not be a revenue proposal. It's only an advance collection, but I think the situation in Sri Lanka in terms of tax compliance is so poor, I think fairly poor in terms of collection, that this is probably one way to increase the base, right? So whilst it does inconvenience those in the lower levels of income, and that there has to be, and like Mr. Gajendran and Mr. Ranavira mentioned, there is going to be a significant inconvenience to those who for who 10% is an excess payment, right? Which the numbers can be quite significant. Unless this proper robust system of ensuring, and a simple system, not a complicated system which requires several visits to the department like we had earlier. It can be a declaration to the bank that your total income rather than going to the department may be easier. So some robust system does have to definitely come in to benefit these. So you're giving them a concession on one side, and we shouldn't burden them on the other side, right? In terms of we are giving them a concession on the tax-free allowance and the reduced rate, but we are burdening them in terms of withholding tax at high figure on their interest income, which if not attended to may go as a, but this would ensure that those who are not filing their return, right, it's now a material amount that you need to go to the department and ensure that you file your return and claim this if it is significant, if this interest income is significant. So whether that will result in a revenue gain is a question, but it will certainly result in a cash flow advantage to the government, where the money is received in advance when the banks withhold. So from there, I think digital services tax was also discussed, and that was there in the earlier also, but now it will be a VAT on digital services. So that means we would have to expect an amendment to the VAT law where the principle of a taxable activity now may have to be expanded to not only carrying out business or leasing property or providing facilities to members, etc. It will also have to be expanded to a situation where the market or the consumer, where a service is consumed in Sri Lanka, that also now will be a taxable activity, which will require registration of a non-resident in Sri Lanka and comply. So these will obviously increase, whilst it will increase the cost of digital services for Sri Lankans. For example, if you're paying for Netflix, for example, or some other digital service from outside. Now, if they do cross a threshold, we don't know what this threshold will be, whether it's the normal threshold of 6 million per annum, or whether it will be higher or lower. Then those non-residents will also have to register in Sri Lanka and will have to charge the 18% from the consumer, which we are not paying at the moment. So whilst it will burden the consumer, it will also lay a level playing field for any local digital provider who is now struggling with both VAT and SSCL after the exemption on locally developed software was removed. Right? So it has both its positives and negatives, and I think there is a significant potential for revenue there as well, because most of the multinationals would want to ensure that they are compliant with the law. So if there is a registration requirement, they would certainly comply with that. Right. So moving on to a few questions. Let me just open it up to Mr. Gajendran first. Can I invite both Mr. Gajendran and Mr. Ranavira to turn on your cameras and unmute? So Mr. Gajendran, so this, do you see now we are trying to achieve this 15.1% of GDP by 2025, so there are 12 months to do that. Given the significant increase in revenue last year, although we didn't quite meet the target, in your view, do you think that these measures would be sufficient to head towards that target, or do you think it's not sustainable because the rates have been quite high in the last 1.5 years, which has affected both businesses and individuals? growth will come only if it's sustainable, right? So we've had significant growth last year. If the economy doesn't grow, if people income won't increase, continuing to tax at these rates without significant growth, would it be sustainable? So just your views on, do you think this is a sustainable approach to achieve the 15.1?
Yes, Suleiman. Now, basically, what is being proposed is the import of vehicle will be allowed to up to about 1 billion or 1.2 billion rupees. Earlier, I think in 2017 or 18, it went up to 2 billion. And now the rates are also been jacked up to going up from 300, 400, 500, 600% is being spoken of. 1st February, we will get to know. So even if they may be able to raise about averaging 350%, 400, you may be able to raise about 3 to 400 billion rupees in revenue at those numbers. Question is, at the initial stages, there can be an influx because people have had no vehicle imports, and there is money available, and whether it is loose money or formal money is another question. It is available in large sum because the vehicle importers are saying they have already booked amounts, and the prices of the vehicle can be phenomenal. This is again because the reason given by the central bank is to protect an artificial bubble created in the second-hand market. Second-hand market, if you see a premier vehicles earlier, if you bought a BMW or premier vehicles, other than some of the Japanese vehicles, after 4 years, the market value dropped to about 50%. Now, even all these premier vehicles, the market value is almost double the amount of the original cost, or even more, even in the second-hand market. And people have said that you can sell a vehicle and buy an apartment. To such an extent, it is artificially boosted. So you are trying to protect an artificial market, first of all. But the reason why the government is importing tax, I don't know, it can protect the finance companies, mainly the finance companies. But then there are so many other people who have to be protected, not only the finance companies. Finance companies should have made a calculated risk in funding such overvalued vehicles when knowing that these things will get reversed. They should have had another mechanism, and you can't protect businesses like that. But anyhow, given that reason is, to my understanding, whatever justification they give, it is to bring in the revenue at 1 billion or 1.2 billion. So if you at 1 billion or 1.2 billion, if you strike a balance average at 400%, you will hit about, I think the government has to raise minimum 500 billion, because 2024, the budgeted figure is 4.1 trillion. The income tax, as Atula put on the screen, has reached about 2 billion, and the customs is about 1.5 billion. And apparently the excise, I'm told, it's about 250, 300 billion. Still, I believe end of the period, we don't know, numbers are not sure whether they will achieve the 4.1 trillion for 2024. But if you see the projected numbers, we have to reach about 4.5 trillion or 4.6 trillion to achieve 15% GDP or even little more. So whether you can even with the vehicle, because they don't want the vehicle imports to go to 2 billion because the foreign exchange becomes vulnerable. So they don't want to do that. So within 2 billion, 1 billion, 1.2 billion, even if you put sometimes 600% on some vehicle, initially you might go. But your question, this can be sustained, is another issue. I don't think you can sustain for long. And the other thing is, by imposing such high rates, you are having a padded up cost for these imports, which cannot be sustained in the future. This is like padding up cost in your companies or padding up cost in the infrastructure project. If these vehicles have to be used in businesses, those businesses can't produce the return to fund these vehicles. The individuals buying is a different question, but the way going into vehicles, into funding, then the whole economics of business and investment and growth and employment you are working against for a short-term thing. Initially, it will have some impact from revenue point of view, but over a period of time, I'm told some of the premium vehicles, I don't know, can be as 70, 80, 90, 100 million rupees a vehicle. How many people can afford that? And is the thing that we are trying to offer to the citizen of the people, if those numbers are correct,
Thank
but
you.
anyhow, hopefully it will stabilize and balance and settle down as go.
Mr. Ranavira, on the so there are two questions. I'll just pass them because one is asking what is the maximum PAY saving under the proposed PAY changes? Is it 18,000 or 20,400? And also for dividend payments, the 15%, is there a withholding tax return required for the past years, 2021, 21, 22?
Yeah, the first one, the maximum saving is 228,000 per annum. Maximum saving is 228,000 per annum. And I saw another question. I answered to that question.
Right.
It says, we may have misunderstood that the second slab of 12% is abolished, whether it will continue. But how it has happened, we worked out the figures to match with the savings, tax savings announced by the president. Then when we worked out on backward workout to match with the tax savings announced by him, obviously the second slab of 500,000 at second slab of 12% has not been given. That is how we have worked out. Then on that basis, the maximum tax saving per annum is 228,000. That is one. Then the second thing, this withholding tax, yes, even it is a withholding tax on dividend. Now, dividend withholding tax is a final tax to the recipient, that's true. But the company who is deducting the withholding tax should submit the withholding tax return. Otherwise, the IRT is not having information on that. Therefore, the withholding tax return is mandatory.
Thank you, Mr. Ranavira.
I would like to add a small thing with relate to the vehicles. Actually, the vehicle now Mr. Gajendran explained it very well. Now the government is in a game whether to collect the government revenue for the year 2025 against the foreign reserves. Now we don't. The government doesn't want to let the foreign reserve come down materially. At the same time, they are expecting the highest income to defray mainly their expenses. Now, when we consider these two, as Mr. Gajendran also said, I think we can't expect a big relief on these vehicle imports. I think most probably they will, because now their target is only one, to meet the reduction of foreign reserves. I don't think they can release much. Anyway, we have to wait till first week of February and see.
Yeah, thank you, Mr. Ranavira. Mr. Kajiran, coming back to you, you see there was talk of during COVID, a lot of these food and FMCG companies did significantly well because people were at home and there was a lot of shopping going on. And then with the inflation, costs going up and prices increasing again, it trickled down. And it has come to a bit of a struggle at the moment. So, and their target, a lot of these companies' target was this lower and middle income segment, right? And that's where the numbers are in terms of volume. So with this tax-free allowance increasing by 50%, right, 50,000 rupees more, and the second slab also bringing in a bit of significant amount of disposable income to that segment. Do you foresee a significant increase in spending in that level of the economy where companies, SMEs and large companies targeting that segment is likely to significantly go up and thereby have a trickle-down effect of increased income tax, VAT and SSCL. Is that something on the volume game? Do you think that would source a spur the economy to some extent?
One of the reasons our foreign exchange has gone up in the recent past, apart from other reasons, is people's ability to spend and consume has been eroded. Consumption has dropped. Even if you say these days there are a lot of traffic and people, but the retail sector, the volumes have not gone up, they say. Basically, now, how much an individual family needs for their living is the question. I think if you speak to the messenger boys and your drivers and chauffeurs, the low-rung people, unskilled and marginally skilled people, you need anything from 100, 120, 150,000 a month to have a basic living. So most of the people, and if you see our poverty rates also have gone up in the recent past, almost doubled. So at the lower level, the earning capacity, the saving capacity has dropped. Even if you take the higher level of income, I'm telling you, people with very much high levels of income, which I didn't say earlier, they have realized 24, 25, Sulaiman, from a cash point of view, it is their worst year in come to payment of income tax, individuals. Because if I can explain this, 23, 24 is the first full year where you are liable to pay tax at the higher rate, double the rate. The maximum rate went up from 18 to 36%, right? So now what happened is in 23, 24, there were three self-assessment people, other than the people who paid under the SA scheme, who had high levels of income. They have to pay on August, November and February, the 3 installments. The bulk of the payment in 23-24 came in the fourth quarter, and when the taxes are finalized in September. If you see the payments in September, the individual returns under the self-assessment scheme was the bulk. And in addition, now 24-25, 3 quarters are caught in, right? So people, I have heard people coming and saying that even people in high position in government service and where they have other income like interest income or consultancy income, income more than the employment income, you may have also got, I got few calls from high people, even from government service, on the, if you see 30th September was on a Friday or Saturday, on the next Monday that they say, look here, they calculated the tax and people are told to pay so much. Is that correct? And they say they will have to uplift with deposits to pay. So even in that case, the erosion of the more than the cost of living, the erosion for saving and investment is in a big way. Because if you see, work out the numbers, people have to keep on setting aside, if you are a compliant taxpayer, setting aside large sums of income now to meet your taxes, So in that, this thing, we have to do structural reform thing, at least encourage people when they save to give tax reliefs or to investment, which will saving and investments are crucial for economic growth. GDP growth, for income generations and for stability. So who is going to save? And if you are going to, because the purchasing power has come down, cost of living has gone up. So how much is the ability to save? And the taxes are 36%, so they have to give some proposals. If people who can make suggestions, even CMA and the chambers, they must suggest, if you are saving money, long-term saving, you have to give some tax credit or deduction as distinct or from taxes, or even if you make investments. Even if those days they had qualifying payment relief for individual houses, for capital and interest. Because that will encourage saving. If you see the barometer for economic growth is the construction industry. To my understanding, most of the construction industry is still dead.
Yeah.
Without happening that, we can't grow. So it is a challenge that I think where they have to be scientifically analyzed. You must undertake some granular analysis without making ad hoc and lopsided policies and churn back, even for example, there's so much of heartburn on this interest income of 10%. They should have, when they announced it, they should have given the solutions and announced it without having this. So now they might bring a self-declaration system or something like that. See the how much of time that is wasted, how much of anxiety that is being caused. So your question is uh, that has to be analyzed, but my say from a high touch point of view, it's very difficult for people to save and even a higher income, because I'm talking of people who have expressed their views that they have to uplift deposit to pay taxes. Those days when it was lower rate, you can earn and pay. Now it is coming, you have to save, savings has to get eroded and you don't have. And unlike those days, you didn't think much of paying the tax. You may pay next year's income will be there. Now you have to set aside the money, because next year you won't have that money so to pay, because next year's tax also will clock in. I hope it has answered something of your question.
Thanks. So just on the next question, on this withholding tax, I think there is a lot of sort of concern on how this is going to refund or the self-declare. Like you said, I suppose the solution should have come as well. But just amongst us, or how the CMA, what do you think would be, Mr. Ranavira first, on a solution? Let's say, okay, the 10% does come, okay, it becomes law. What would you think would be a practical aspect? So we look at both sides, not just those who are in difficulty to pay, but also the significant, I think, tapping of the non-compliant taxpayers, right, who are not complying with, who don't file their returns, who don't pay their quarterly tax, the 10% coming upfront, whilst that benefit is there. How can we, as maybe CMA, come up with suggestions on how the those who are below the threshold, what is a easier way of addressing the undue withholding tax being collected?
Yeah, I think in this case, what is important is a very simplified direction system. Now, problem, no sooner we simplify it, there may be various manipulations as well. But now we have gone up to a digital era. Now we are in a digital area. We are collecting all the information. Basically, all bank accounts are connected with the NIC numbers in private sector, in individuals' capacity, individuals. Now with that, I think the best thing is to, as Mr. Gajendran also said, best thing is to go for a self-declaration to the financial institutions by the depositors. Now, earlier we had this system. We used to give a declaration to the financial institution regarding our income level. Now, here the income level should be the total income level. Whether my income is in between 150,000 rupees to 200,000 or 150,000 rupees to 200,000, 200,000 to 250,000 or some slabs like that. That should comprise the interest income plus all other income. Then bankers can easily monitor, the IRD can easily monitor, as well as all the bankers also can easily monitor through the NIC numbers whether this particular person is having any other deposits which they can trace. At the end, as the IRD is getting all the information on electronic format from all the financial institutions, Now they are uploading those information directly to the REMIS system. Not that they are retyping, they are uploading it. Now, as they are uploading, it's another step. Matching these things. You can improve the system, REMIS system, to give to match these things and give warning on the mismatching situation. I think they should improve the REMIS system in such a way to monitor those things. But at the same time, we should encourage the IRD to introduce a simplified declaration system and simplified tax deduction system. To me, increasing of 5% to 10%, I think that's a fair decision, subject to having a proper simplified system of directions and self-declaration. Thanks.
Mr. Gajan, you want to add to that in terms of if it does come through, how can we as a body sort of submit proposals to
So
ensure
basically,
that?
I think Ista, as I mentioned, and what Atullah is mentioning in, to simplify it, people like CMA, the Inter Chartered Accountants, and maybe the chamber, they must, they must heavily propose to have a self-declaration system with the NIC numbers, digitalized numbers. Now, as I said, 123, there is connectivity with the banks and the finance company to the department. And also, we must impress upon the department to see when there is interest income from the bank or financial institution, automatically you have to give the withholding tax because the tax would have been withheld. If you are going to tax a certain amount, say 100,000 rupees, you have to give 10,000 rupees credit. You don't need to go in search of anything else. If you are, because it is the situation, but they have to deduct. Obligation to deduct is statutory obligation to deduct and pay is the withholding agent, statutory withholding. So you don't need to have inconvenience or harass this taxpayer. You give the credit, then you see whether they have remitted or nothing. That is your part. Now, what is happening is, for no mistake of the taxpayer, particularly the individual and the small income taxpayers, companies, the entire burden of justifying this money has been paid and done is with that, and they can't do that. Even if you sometimes cases when you give the withholding certificates, they don't say the system is not there and things like that, And I don't know, there are individuals who have told me whether this is correct. Sometimes in the REMIS system, they are showing interest income which they can't reconcile. REMIS system is showing interest income. They don't have interest income like that when they reconcile the income. I don't know how it is correct, but this has been brought to my attention more than one person. So this is something that CMA must write. Two things is a self-declaration. Your problem, connectivity is there. Do the identity card number and connect the people, and so that the people, and if someone is making a misstatement, a wrong statement, they can be punished. Right. The other one is if you see interest income and an income you are going to tax, don't ask for anything else. Give the credit.
Yeah, correct.
Because the bank has to deduct, finance company has to deduct. So you didn't trust the taxpayer, no. You are trusting the statutory agent, no. So why are you bothering the taxpayer now? So give it, no problem. Those are the two things I think CMA Lakshman is listening. He can write up and make a noise also, because your voice will be heard better than anyone else's voice, Lakshman.
Yeah. On that, just before you leave, Mr. Gajendran, before we go to Mr. Ranavir again, your comments on the 45%, we didn't sort of capture that, but the 45% on betting, gaming, tobacco, and liquor income tax. So they are currently at 40. They are going to get back with another 5. Your views on how that will impact the grey market imports, the employees in those areas, the tourism impact. I mean, wide-ranging issues on pricing and competitiveness. Your views on that proposal?
This is income tax.
Hmm.
Economics theory is that income tax won't affect the prices. That's another thing, whether they have the capacity to pass on the prices is a competition. Other thing is now this is again ad hoc policies. You increase these taxes and it has come to high levels. Every tax is high at the moment. Then you must see how it is impact on the illicit industry, because people who are selling this liquor might go for an informal, because if it is taxes are unaffordable, there is a natural tendency to move out of the informal economy. They are forced to do that. Other thing is, there are alternates that come, substitute comes, which are not comparable alternates or substitute. It can have a long-lasting effect on the health of the people, and there can be other consequences. Your business fabric, the family environment, your medical setups, it can have long-term consequences. So this has to be scientifically done. I still don't see this government forwarding a scientific impact. You make this proposal, how much is the impact on the other segments of the life, society, institutions? The budget, it doesn't have. Sometimes you are doing something, you think it's a benefit. You might think it's a short term, but in effect, it cannot be a short term benefit. Even the president is now going on saying cleaning up at Sri Lanka. Very point is how many people are dying through these vehicle accidents, right? And they are bringing up cleaning up process of where vehicles, people in an accident happens, they are dying not because of the accident, because some of the things in the vehicle is getting into their system and killing them, So that type of situations are there. So now, like that, they have to have statistics and do evaluate and use AI and data analytics and information and make some. We have to come to that stage sooner than later. Otherwise, we'll hit and run, and end of the day, we won't get the desired results.
Right. Thank you, Mr. Gan. So moving on to Mr. Ranavira, is there a change to the WHT on services? There is a question. Will that continue to be 5? Will that also move to 10? Atula?
Actually, there's no announcement in the president's speech. He didn't touch the service sector, the withholding tax on services. Now, therefore, anyway, even with this withholding tax on interest, we had to wait and see the legislation, how they are going to introduce. But luckily, he mentioned that increase in a loan with the facility of the direction. Likewise, now if there are, but he has not mentioned anything about the increase of withholding tax on service providing. Therefore, I don't think that will happen.
Increase, yeah. Okay.
Yeah.
So next question
At the same
is,
time, one. At the same time, now, as Mr. Gajendran also said, I also in the strong view, these heavy taxes, now liquor we are increasing. We'll say that's okay, the people who are consuming will pay. That is the simple answer, no?
yeah,
But at the same time, the country's medical expenses will go up.
yeah.
And countries' import for medical items will go up. And there are so many repercussions on those in the bad effect of to the economy. But generally, heavy taxes is always discouraging a country's development. Because heavy taxes affect to the savings percentage, savings ability. When the savings ability comes down, it curtails your investment ability. When the investment ability comes down, when you are investing something, you have to borrow more and more money from the banks. Then always you think about the cost of these finances. With all these things, what will happen? The tendency of people in the entrepreneur moving towards new investment and the expansion of businesses will come down. Therefore, in long run, in short run, yes. Now we can see last year they are boasting that they have collected the highest tax in Sri Lanka. Yeah, we can boast it, but how long we can
Correct.
survive like that, and what will be the subsequent repercussions on these things. Because now repercussions we may have to face the repercussions of these increased taxes. Yeah, therefore we have to think about these things also when we are increasing the taxes. Thanks.
So I think, yeah, you're right. We have to be very careful that it shouldn't affect our growth trajectory, because Sri Lanka needs growth right now, right?
Correct. Yeah.
The sustainability of that, you can't kill the goose that lays the egg. You have to, one shot you can collect a lot, but then there should be sufficient money in the system to reinvest, attract people, so many things, right? Businesses. So growth is the name of the game at the moment for this country. If our tax system is not going to facilitate growth, you're not going to get a sustained growth in the income as well. So that has to be balanced very carefully, I think. Moving on to the next question, Atul, I'll pose it to you first, and then Mr. Gajendran, I'd appreciate if you can come in. On this digital services VAT, it's a new concept for all of us. We haven't experienced it before. Other countries have. So the idea is, I think, it appears to be to create a level playing field for our local digital service provider to encourage local entrepreneurship in digital services in the IT sector. And they are getting a disadvantage by the VAT and SSCL after the removal of the exemption for VAT. So why should the large MNCs who are providing this have a edge over them of 20%, right? Whilst they do have the economies as well. On top of that, you're giving them a tax advantage. What would you think, since there is no law, we have no direction on what this will capture? Just your view on what do you think the parameters should be, if you have a view on it. Who should they go after? Who should be excluded? Who will get impacted by it? A lot of small people are relying, for example, a lot on advertising on Instagram and Facebook for their small business, right? So that's a digital service. Now, if this 18% comes in, those advertising companies like Facebook, TikTok is going to charge that from these small businesses at 18%. There is good, there is bad. Just your views on what should the parameter, okay, they are coming into the proposal, what should they include, what should they exclude? Just a very broad view that you have on it. First, Mr. Ranavira, and then Mr. Gajendran, you can add.
Yeah, what I feel now, anyway, with relate to the VAT, we have a registration threshold.
Correct.
Now, if you are recognizing the digital services to be liable to VAT, we will apply the same threshold of 60 million. And any digital service provider whose turnover is above 660 million should be liable to VAT. As you said, anyway, VAT being an indirect tax, it keep on passing to the next customer and next on. Ultimately, it pass on up to the ultimate consumer. Can't help. But now here, the most important thing, the digital services, taxing of digital service is a must. We have to do that. But now we have to catch hold. There are certain digital service providers, the overseas service providers are playing in the local market, where the people, the people who are doing the same business as local companies, at present, most of them are paying these taxes. Whereas there are some service providers who are giving the service, initiating the service from abroad, and they are not ultimately, they are not charging or paying taxes on those things. Therefore, this disparity between two different business people in the same business is not advisable for a development of a country. Therefore, we have to create a strong mechanism of catch-holding these people and taxing these people. Bring everybody into the tax net. In one day, we can increase the tax, the registration threshold and all. But that we have to think about that only after bringing everybody into the tax net.
Right. Okay, good. Mr. Gajendran, your views on that, on the digital services on VAT?
Yeah. You know, the first thing is when you introduce this tax,
Mm.
the foreign companies who have been asked to pay this 18%, they are not going to absorb this. They will adjust the price and put it in. My reading the situation is, taking the case of taxi services, true on the ground of no level playing field, this will bring a level field playing. There are so many other level playing field within the country. We are not looking at it. We can go through that, right? But I have a feeling this will increase the taxi fares, because at the moment, with the local players paying VAT and the foreign holders not paying VAT, the price of the taxi fares are competitive and comparable. There have been instances cited where the local provider is charging less than the foreign guy. Now, when the foreign guy also starts charging, he's going to put it up, the prices will go up, right? Because the local guy also will follow the foreign party. The foreign guy will do because it is that. For that, other thing is, you have to be very careful. This consumption principle is good, but it is never implemented in all services. You can have on digital services, you can impose. If you are going to charge for any services this price, you will destroy this economy. We will be uncompetitive in the world. That is the reason most of the other countries for other services, this is digital is a different situation. Other services, they have the withholding system for income tax. If you see for digital services also, India, a big country, didn't impose VAT for digital services. What they have imposed is the equalization levy of 6%. And then if you register a PE there, then you won't have that 6% also. So we have to see, because we are a small country, we want to encourage investment and coming here. First of all, we have to be careful whether we will chase away. Services mean this consumption principle good, that is only on goods. If you want to bring it on services, then all the services over a certain amount where they will have to charge this thing, they are going to come and pay, it's not going. That's what in European countries, sometimes you have a reverse charge. The individual consumers don't pay the taxes, but the institution pay the reverse charge. That's a different situation. Here, when they are going to register and they don't carry on a business here, we have to be careful. It looks very rosy and picturesque to talk about it, but you have to see what is happening. The investments, particularly foreign or local investment, is all geared on some incentive, implementation and outcome of those incentives, right? Without that, it doesn't. I'm not talking of exemption and things like that. So you have to be competitive in those situations. So I feel even at the moment, true, there is no level playing field. There is no major difference from the local service provider and the foreign service. And local service providers sometimes are charging less than the foreign service provider by competition reasons. But when you put this, when all charges, this is again like the big packer ticketed guys, like the rice environment. Few people set the market. So when they set, others will follow suit. So if the big service providers, foreigner, if they have, depends on the market side, if they push the price, they are not going to pay out of their pocket. They will adjust the prices. Then the price will go up automatically. Now, if you don't see, at the moment, do you see 20% difference between local on a taxi fare and a foreign provider? No, right? It's not there. The local guy is charging more and the foreign guys are charging no. Because then the demand and supply comes in, you go into the foreigner will charge more, that it balances off, right? So these market forces should be allowed to function, right? You play now, if you are talking a level playing field, Sulaiman, there are so many industries in this country, within the country, there is no level playing field. The local suppliers, some are paying taxes, some are not paying taxes. Now we are going and interfering with the foreign supplier. The local suppliers are not, I don't want to mention sectors. There are so many people who are evading taxes in the local market, large players, income tax and VAT. But the other people in the formal system, you will pay. You will come across numbers, staggering numbers. I came across a situation recently. One company, I won't mention the industry, evading income tax, 50 million a month, right? So they are in the local market. There are other guys who are in the formal system. They pay the tax, right? So
Right.
without going into the international cross-border equalization, we have to equalize this here. Then only the other place will come. We are going and doing something. We are putting the cart before the horse.
Yeah,
So it
no,
is
I think,
something.
fully agree. Yeah. So just on this increasing the base, I think that's critical for us to overall bring down rates. And that is something I think the regulator, who's the collector, who's the Department of Inland Revenue and the Customs, need to ensure that this base is significant. And we input all the resources we have in this next 12 months to ensure the base is enhanced so that everybody gets a relief, because currently, based on what we know, there is a very little fiscal space even to spend, even to invest from the government side. So I think the priority should be what you just said, that is to ensure the base is increased without any excuse. I mean, you take the last return that were filed, we met some officials and you also were there, Mr. Gajendra, they were very disappointed with the filing. They said they were very disappointed with the filing. So, I mean, the first step you do is you send out a penalty notice, right? The law clearly has a 50,000 penalty. And out of 22 million people, if at least 3 million should file a return, right? 2 to 3 million should file a
You
return.
said they were disappointed with the file. What is that?
With the level of filing of individual tax returns in the last November,
disappointed.
those who have a file have not filed. Right? So there is within the law 50,000 penalty. You put 50,000 rupees into 1 million people, you're talking about 50 billion rupees immediately. Without an excuse, if you charge that the first time, I think everyone will.
I am not on that time. I am not holding a brief for the individual taxpayers. But if there are 2 points we have to consider, and this has to be communicated, the online digital system, lot of the individual people have found it difficult, right? That is one thing. So they are reluctant to file. Other thing is, look at an individual income tax return, how complicated and complex it is, right? You have to bring a simplified one-page return for individuals. I think I may have told this before, even a retired Chief Justice, and when this new law came, when this return form came, he came to my office, very aging man. He came in, Rajendran, I find it difficult to understand this return form. I need assistance. So you need assistance. When you go through this individual return form, I don't want to go through. You stand up somewhere, it's like a cobweb. It goes all over the place, right? So first you have to make the return simplified, help the taxpayer to go and pay the tax anywhere. Now you can't pay by, check payments, all that hassles are there, right? So make it easier, convenient, business friendly. Then they can put all these impositions.
I agree with you on that, but I don't think it's an excuse for anyone to not file, right? It's a civic duty that we need to ensure. I mean, it may be difficult, then you get help. I mean, these are people who have sufficient income who are expected to file. So you need to get a department, I think, has online, you can go there and file. So I don't think I think we lost Mr. Gajan. No? Mr. Gajan, can you hear us? Okay, so till Mr. Gajendran comes back, I'll just move to the next question. Mr. P. Gajendran, how long do we have?
Professor, we can take it another 2 to 3 minutes, no?
We are closing at 5, is it? Are we closing at 5? Okay. All right, so we'll take another 2 questions and wrap up. Atul, there is a question on investing money. If you invest it in FD, you'll get you get taxed annually. But if you invest in a property or land in 10 years, they're asking what is the tax rate of that if they're selling the capital gains after 10 years. If you want to just take that question, what will the tax rate be then?
I think what he's asking now, if he'll put into a fixed deposit, immediately the taxes to be paid. And if we'll invest in a immovable asset, we can sell off after 10 some years and get a capital gain, which is taxing at 10% indirectly. If you are saying tax rate is also 10%, again the current tax rate varying up to 36%. Now, what I think we can't match these two together, because one is a quick liquid return. The other one is late collection of money. Therefore, we can't match these two together. But if I'm explaining, yes, as he has mentioned, on fixed deposit, the interest income is liable to tax at the rates varying from 6% to 36% in the case of an individual. But if we'll invest in an immovable asset, capital asset held for investment, in one day we can dispose it and earn a gain. Then we have to pay tax at 10% on the gain. Therefore, if you are affordable to wait till get it realized, I think that's a worthwhile investment. But that depends on the person.
And also, Mr. Ranavir, if it is a house your own house that you own for 3 years and live for staying for 2 years, is exempt.
Yeah, that is exempted.
You can keep changing houses over that 10 years and get exempt income as well.
Correct. Yeah. That's correct. Yeah.
So, but then, like you said, it is not cash liquid, so you need to have sufficient cash to then be able to do that and get cover your living expenses. So, yeah, there are options for long-term investment if you have cash. Moving on, Mr. Gajanan hasn't joined us. All right. What is somebody's asking? What is the imputed rental income? So that was basically a proposal that was brought to deem a value for your property on which a tax would be deemed income was supposed to, on the rental yield you can get even if it is not rented, and they were going to charge tax on it. So that has been done away with. So we don't have to worry about that for the moment. Next question, service exports are currently exempt. Yes, it is, if received in foreign currency. Yes, so the condition there, Mr. Ranvir, you just want to take us through what are the conditions for the exemption to be fulfilled on foreign currency?
Services export, there are 4 conditions. The first thing, it has to be a service and it has to be consumed in abroad. Second condition is the consumed in abroad. Then the remittance should come in foreign currency. The fourth one, the remittance should come through a banking channel. There are 4 conditions. It has to be a service. Then the second thing, consumed in abroad. Third one, remitted in foreign currency and remitted through a bank. If we are, as far as you are fulfilling all 4 conditions, at present, it exempted under item U3 of the 3rd schedule of the Inland Revenue Act. I think I have answered that.
Thank you. So, Mr. P. Gajendran, is it time up? Can I hand it over to you? Or?
Yeah, since we are coming to an end of the presentation, first let me thank for the presenters and moderators for your valuable time and educating our members and the general public. Now I hand it over to Professor Lakshmana Vattavala to do the concluding remarks.
I think I have to thank everyone for the wonderful job they have done. Actually, I think we were supposed to finish at 4:30, but I must thank you for going on till 5. I think I hope you didn't mind, and I know that you all are real experts in this area and would have loved to answer all the questions. So I think we must thank all of them and the participants for those very, very relevant questions that they asked. And I'm sure all of them would again that. I think Mr. Gajendra has also said that we have to make some representations. I'm sure we will look at that and see, and maybe we'll also have to consult you as to how we can do that, because that would be an important area that we need to look at. And our other Mr. Gajendra will, he is the chairman of our tax committee, so he will also maybe consult you and get some advice on what you have stated. So I think on the whole, starting with Mr. Atul Ranavira with the full presentation, I know a lot of you all have been asking for the presentation. So Mr. Atul, I hope we can
Yeah, we
make the
can share it.
presentation. We can share it, and also we will make available the recording so that you all can listen to it and then go through it. And those are the two areas that they have listened. So let me thank everyone. Also, our Mr. Gajendra, he's been quite active on the tax area and getting these seminars organized. And this, I think, was a welcome seminar, pre-budget seminar, I should call it, although we did not make any proposals. We went through what will already be maybe confirmed in the budget. I hope is that correct, Mr. Gajendran? This will be confirmed in the budget?
Yes, most probably.
Yeah, right. Okay. Okay, so thanks very much, and also all our participants who have been here, and also our secretariat, Ms. Shanti and the others who have supported the whole program, and for a very, very wonderful program. Of course, more than 800 are registered, but we always find that maybe 50% is the number that will come, and then maybe some of them may be listening to the recording and then making use of it. So the digital system is really playing well, and I'm sure that the digital ID will be coming soon, and that might really maybe reform most of the things that are happening. And I think it's not only the ID, but all departments, government department, government services, everyone will be looking at that. So once again, let me thank all our two speakers, the moderator, and of course, our tax chairman of the tax committee, and all our participants, because although we went half an hour excess, most of them stayed on because they knew that it will be valuable information and advice that they will get. So thank you and all the very best. And maybe we'll invite all of you to come for our budget seminar, which will be held physically. And I'm sure most of those who are here will be present for that budget seminar also. Thank you and all the very best.
Thank you all. Thank you.
Thank you.